Most people don't dislike index universal life policies. They dislike an experience, a statement that didn't look like they expected, a policy that underperformed the illustration, a promise that sounded simple but wasn't explained clearly. And so the conclusion becomes IULs, they just don't work. But that conclusion skips the most important question. Was the problem the concept or the design? Let's take a simple analogy. Imagine blaming a house because it collapsed. Not the blueprint, not the materials, not the builder, just the idea of a house. That's what happens with IULs. It's a tool, not a strategy. Index Universal Life is a chassis. It doesn't tell you how fast to go, where to drive, or how much weight to carry. Those decisions come from design. And this is where most policies quietly fail. Design failure number one: too much insurance, not enough cash. Many IULs are sold like traditional life insurance: maximum death benefit, minimum cash value. Now, that's fine if protection is your only goal. But if the intent was growth, income, and long term efficiency, then the structure is fighting itself. The policy spends its early years paying for insurance costs instead of building momentum. Not a bad product, a mismatched design. Design failure number two: optimistic illustration. No real explanation. Illustration shows possibilities, not certainty. But too often, caps are assumed to stay high. Loans are treated as free. Volatility is ignored, and costs are barely discussed. When reality shows up, disappointment follows. Not because the policy failed, but because expectations were never grounded. Design failure three: loan abuse. Loans are a feature, but when misunderstood, they become a liability. If loans are taken too early, too aggressive, without understanding compounding interest, the policy doesn't break, it bleeds slowly. It bleeds slowly. Again, not a concept failure, a misuse of leverage. Design failure number four: one size fits all indexing. Indexes are tools, not magic buttons. Different strategies behave differently in flat markets, volatile markets, long sideways periods. Policies that never adapt eventually stall. Indexing requires management, not autopilot. When you line up failed IUL stories, patterns appear. Same product, same carrier, completely different outcomes. Why? Because design determines destiny. The truth no one likes to say out loud. Index Universal Life doesn't fail loudly. It fails quietly, slowly. Rising costs, missed expectations, and by the time someone realized what went wrong, they assumed the concept was flawed. It wasn't. The right question is not, is IUL good or bad? The real question is, was it designed for what I needed to do? Protection, accumulation, income, or legacy? Each requires a different structure. In the next video, we'll talk about who IULs was actually designed for and who it wasn't. Because the most ethical thing you can say about any financial tool is it's powerful when used correctly.